Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 3 of Unlocking IPO Secrets, a guide to going public. Notable IPO success stories. When it comes to initial public offerings, IPOs, there are several remarkable success stories that have caught the attention of investors worldwide. Let's delve into some of the standout cases and the valuable lessons we can learn from these high-profile IPOs. Highlighting successful IPO cases. Google, Alphabet Inc. Google's IPO back in 2004 was a game-changer in the tech industry. The company raised over $1.67 billion, and its shares were initially priced at $85. Fast forward to today, Alphabet Inc., Google's parent company, is a household name with a market capitalization in the trillions. Amazon went public in 1997 at $18 per share. Initially faced with skepticism due to its focus on growth over profits, Amazon's IPO turned out to be a pivotal moment. The company's stock price has soared over the years, making it one of the most valuable companies globally. Facebook's IPO in 2012 was highly anticipated, and despite facing challenges initially, the social media giant stock has seen a resilient growth trajectory. Lessons can be drawn from Facebook's ability to adapt to changing market conditions and innovate consistently. Lessons learned from high-profile IPOs. Timing is key. Successful IPOs often hinge on timing. Companies need to go public when they are at a point of stability and growth, allowing investors to see the potential for future returns. Transparency and communication. Maintaining transparent communication with investors is crucial. Companies that provide clear financial information and future growth strategies tend to garner more investor confidence. Adaptability and innovation. High-profile IPOs demonstrate the importance of adaptability and innovation in a rapidly evolving market. Companies that can pivot, embrace change, and stay ahead of trends are more likely to succeed post-IPO. Long-term vision. Building for the long term is essential for IPO success. Companies that focus on sustainable growth strategies and long-term value creation are more likely to attract long-term investors. In conclusion, studying the success stories and strategies of notable IPOs can offer valuable insights for companies considering going public. By understanding the factors that contributed to these success stories, firms can better prepare for a successful IPO journey. Challenges and controversies surrounding IPOs. Initial public offerings, IPOs, present various challenges and controversies that impact the stock market and investors. Understanding these issues is crucial for anyone looking to invest in IPOs or comprehend their implications. Let's delve into the 3 main aspects that spark debates and concerns within the realm of IPOs. Market volatility and IPO performance. The primary challenge surrounding IPOs is the volatility often observed in the market post-offering. New companies entering the stock market for the first time can experience drastic price fluctuations, leading to uncertainty for investors. This roller coaster ride can be thrilling yet perilous, requiring a keen sense of market trends and risk management. The performance of IPOs can sway drastically based on market conditions, investor sentiment, and company-specific factors, making it a high-stakes game for all involved. Criticism of IPO practices. Critics often point out various flaws in the practices related to IPOs. One common critique is the underpricing of IPO shares, which potentially leaves money on the table for the company going public. Additionally, there are concerns about the allocation of shares in IPOs, with accusations of favoritism towards institutional investors over individual retail investors. Such practices raise questions about transparency and fairness in the IPO process, warranting a closer look at the mechanisms governing these offerings. Impact of IPOs on existing shareholders. The decision to go public through an IPO can have significant implications for existing shareholders of a company. While IPOs offer an opportunity to cash out and realize gains, they can also dilute the ownership percentage of early investors and employees. Furthermore, the influx of new shareholders post-IPO may influence the company's corporate culture and strategic direction, leading to debates over maintaining the entrepreneurial spirit versus meeting the expectations of public investors. Balancing the interests of existing shareholders with the demands of the public market is a delicate dance that companies must navigate when considering an IPO. Navigating the challenges and controversies surrounding IPOs requires a deep understanding of market dynamics, regulatory frameworks, and investor psychology. By staying informed and critically evaluating the implications of IPO practices, investors can make informed decisions in this fast-paced and ever-evolving landscape. The future of IPOs. The landscape of initial public offerings, IPOs, is constantly evolving, shaped by various trends and technological advancements. Let's delve into the future of IPOs and explore the key aspects that are influencing this dynamic realm. Trends in IPO offerings. Increased diversity. Companies from a wide array of industries are opting to go public, diversifying the offerings available to investors. This trend opens up opportunities for retail investors to participate in IPOs of companies they are passionate about. SPAC boom. Special Purpose Acquisition Companies, SPACs, have gained significant traction as an alternative path to going public. The flexibility and speed of the SPAC process have attracted both companies and investors alike. Globalization. The IPO market is becoming increasingly global, with companies from various countries considering listings on international stock exchanges. This trend expands investment opportunities beyond domestic markets. Retail investor participation. Retail investors are playing a more significant role in IPOs, driven by increased access to trading platforms and a growing interest in stock market investing. This shift is reshaping the traditional IPO landscape. Technological advancements in IPO processes. Digital offerings. The digitization of IPO processes has streamlined the way companies access capital markets. From electronic roadshows to online investor education, technology is enhancing the efficiency and accessibility of IPOs. Blockchain integration. Blockchain technology is revolutionizing the handling of securities in IPOs. Smart contracts and blockchain-based platforms are increasing transparency, security, and automation in the issuance and trading of IPO shares. AI and data analytics. Artificial intelligence, AI, and data analytics are being leveraged to assess market conditions, investor sentiment, and pricing strategies in IPOs. These technologies enable more informed decision-making and enhance the success rate of IPO offerings. Regulatory compliance tools. Fintech solutions are automating regulatory compliance checks and procedures in IPO processes. By utilizing advanced software, companies can navigate complex regulatory requirements more efficiently and ensure a smoother IPO experience. As IPOs continue to evolve in response to market dynamics and technological innovations, companies and investors must stay attuned to these trends and advancements to capitalize on the opportunities presented by the future of IPO offerings. Understanding IPOs is essential for anyone involved in the stock market. IPOs offer a unique chance to invest in a company from the ground up. They can be risky, but the potential for reward is high. Research, patience, and sound judgment are key. Investors must stay informed and be ready to act when opportunities arise. The IPO market is dynamic, but with the right approach, it can be a valuable part of your investment strategy. Stay smart, stay savvy, and make your moves count. An initial public offering, IPO, represents a pivotal moment for any company, signaling its transition from a private entity to a publicly traded one. This process involves offering shares of the company to the general public for the first time, providing a pathway to raise substantial capital for growth, expansion, and other strategic objectives. Unveiling the secrets of a successful IPO requires understanding its complexities, benefits, and potential pitfalls. The journey towards an IPO begins long before the shares are actually sold. Preparation is key and starts with the company evaluating its readiness to go public. This involves a thorough assessment of the company's financial health, business model, market position, and growth prospects. Companies must ensure that they have a compelling story to tell potential investors, demonstrating strong performance and future potential. The journey towards an IPO begins long before the shares are actually sold. Preparation is key and starts with the company evaluating its readiness to go public. This involves a thorough assessment of the company's financial health, business model, market position, and growth prospects. Companies must ensure that they have a compelling story to tell potential investors, demonstrating strong performance and future potential. Selecting the right underwriters is a critical step in the IPO process. Underwriters are typically investment banks that manage the public offering. They play a vital role in advising the company, preparing the necessary documentation, setting the initial share price, and marketing the shares to potential investors. The reputation and experience of the underwriters can significantly influence the success of the IPO. The next major step is preparing the registration statement, which includes a prospectus. This document is filed with the relevant securities regulatory authority, such as the Securities and Exchange Commission, SEC, in the United States. The prospectus must provide a comprehensive overview of the company, including its business operations, financial statements, risks, and management team. This transparency is essential for building investor trust and ensuring regulatory compliance. During this period, the company undergoes rigorous due diligence. This involves a detailed examination of its financials, legal standing, and business operations to ensure all information is accurate and complete. Any discrepancies or issues identified must be resolved before moving forward. Due diligence helps mitigate risks and assures investors that the company is solid and reliable. Following the filing of the registration statement, the company enters a quiet period. During this time, the company's communications with the public are restricted to avoid influencing the share price unduly. Concurrently, the company and its underwriters embark on a roadshow, presenting the investment opportunity to institutional investors, analysts, and potential buyers. The roadshow is crucial for gauging investor interest and setting the final share price. Determining the share price for the IPO is both strategic and complex. The goal is to set a price that maximizes capital raised while being attractive to investors. If priced too high, there may be insufficient demand, leading to a poor market debut. If priced too low, the company might not raise the desired amount of capital and leave potential funds on the table. The underwriters use their market expertise and feedback from the roadshow to strike the right balance. In conclusion, an IPO is a complex and multifaceted process that offers significant opportunities and challenges for both companies and investors. For companies, it provides access to substantial capital and enhances visibility and credibility. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.